What's the best way to secure your financial future through real estate? With so many options out there, it can be hard to know where to start. In this video, we'll break down 7 smart strategies to help you get started with real estate investing. Whether you're looking for a steady stream of passive income or aiming to grow your wealth through property appreciation, there's a strategy here for everyone. From investing in REITs to exploring real estate crowdfunding and rental properties, we'll cover it all. So stick around and learn how you can start building a solid financial future with real estate investments. Let's get into it. Diversify with real estate investment trusts, REITs. When people think about investing in real estate, they often picture buying physical property. But there's an easier way to get in the game. REITs, real estate investment trusts, REITs, let you invest in real estate without actually owning buildings. These companies own, operate, or finance properties that generate income, like office buildings, shopping centers, or apartments. One of the best things about REITs is the liquidity they offer. Unlike owning physical property, where selling can take time, you can buy or sell REITs just like stocks. This makes them a great option for investors who want real estate exposure without the hassle of managing properties. Plus, REITs typically pay regular dividends, which can provide a steady income stream. With REITs, you're also getting diversification. Since they often hold a variety of properties, you're not putting all your eggs in one basket. If you want to dip your toes into real estate investing, but avoid the complications of owning property, REITs are a solid option to consider. Invest in rental properties. Ever thought about owning rental properties? It's one of the classic ways to create a steady stream of passive income. Whether you're buying a residential home or a commercial building, renting it out can generate monthly cash flow while the property itself appreciates in value over time. It's a two-way win. You get income from rent and potential long-term gains from rising property values. But here's the catch. Managing rental properties isn't completely hands-off. To really make the most of your investment, you need to keep up with property maintenance, find good tenants, and ensure everything runs smoothly. Hiring a property manager can help if you don't want to deal with the day-to-day responsibilities, but that's an additional cost to consider. With the right approach, rental properties can be a great way to build wealth. The key is to manage them well and keep an eye on the market to know when it's a good time to buy or sell. If you're ready to handle the work involved, rental properties could be a solid investment choice. Explore real estate crowdfunding. Ever wish you could invest in large real estate projects without needing a ton of cash up front? That's where real estate crowdfunding comes in. It's a platform that lets you team up with other investors to pool your money and invest in bigger real estate opportunities that you might not be able to afford on your own. You can put in a smaller amount of capital and still get a piece of the action. What's great about crowdfunding is that it opens the door to properties like commercial buildings, apartment complexes, and more, which would normally be out of reach for most individual investors. Plus, since you're pooling your money with others, it spreads out the risk across multiple investors. It's a great way to get into real estate without needing a huge chunk of change up front. If you're looking for a way to start investing in real estate without breaking the bank, real estate crowdfunding is worth checking out. It offers a relatively low barrier to entry and allows you to diversify your investments across multiple properties. Consider house flipping. You've probably seen house flipping shows on TV, where people buy rundown homes, fix them up, and sell them for a profit. It looks exciting, and it can be, but there's more to it than meets the eye. House flipping involves finding properties that are undervalued, renovating them, and then selling them at a higher price. Done right, it can bring in a nice return, but it's not without its challenges. To be successful at flipping houses, you need to understand the real estate market and have a solid grasp of renovation costs. Overestimate your budget or misjudge the potential resale value, and you could end up losing money. It's also a hands-on investment that requires time and effort, from managing contractors to making sure the renovations stay on track. While house flipping can be profitable, it's a higher risk strategy compared to more passive investments like rental properties or REITs. If you have the knowledge and are willing to put in the work, flipping can be a rewarding way to earn money in real estate, but it's definitely not for the faint of heart. Leverage real estate partnerships. Real estate can be expensive, and sometimes it makes sense to team up with others to make a bigger impact. That's where real estate partnerships come in. By pooling resources with other investors, you can access larger or multiple properties, which might not be possible if you were going solo. Sharing the costs also means sharing the risks. making it a smart way to balance investment risks while aiming for higher returns. But as with any partnership, it's important to make sure everyone is on the same page. Clear agreements about each person's role, responsibilities, and share of the profits are essential to avoid misunderstandings down the road. Whether you're partnering with friends, family, or other investors, good communication is key to making the partnership work smoothly. Real estate partnerships can open up opportunities for properties and projects you wouldn't be able to handle alone. If you're willing to share the workload and profits, teaming up with others can be a powerful way to grow your real estate portfolio. Just make sure to have everything in writing and know who's doing what before jumping in. Utilize tax benefits. One of the great things about real estate investing is the tax benefits that come with it. When you own property, there are several ways to reduce your taxable income, which can help increase your overall returns. For starters, you can deduct mortgage interest, property taxes, and even depreciation. These deductions can add up and make a big difference when it's time to file your taxes. Depreciation, in particular, is a unique benefit. Even though your property might be increasing in value, the IRS allows you to deduct a portion of the property's cost each year, treating it as if it's losing value. This helps offset your rental income and lowers your tax bill. To make sure you're taking full advantage of all the tax breaks available, it's a good idea to consult with a tax professional. They can help you navigate the rules and make sure you're maximizing your savings while staying compliant with tax laws. Properly using these tax benefits can significantly boost your real estate investment returns over time. Invest in real estate mutual funds. If you want to invest in real estate but don't want the hassle of owning property, real estate mutual funds might be a good option for you. These funds invest in a variety of real estate-related assets, like REITs, real estate operating companies, and mortgage-backed securities. It's a way to get exposure to the real estate market without actually buying and managing properties yourself. One of the key benefits of real estate mutual funds is diversification. Since the fund spreads its investments across different real estate assets, you're not relying on the performance of just one property or type of real estate. Plus, these funds are professionally managed, which means you don't have to worry about the day-to-day decisions. They're handled by experts. For investors looking for a more hands-off approach to real estate, these mutual funds offer a balanced way to tap into the market. You get the benefit of professional management and diversified real estate exposure without the need to own or manage physical properties. It's an easy and flexible way to add real estate to your investment portfolio. By using these real estate strategies, you'll be well on your way to securing your financial future. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more tips from the Money Blueprint. Stay tuned for more ways to grow your wealth and make smarter investment choices.